Early 2000s. Suburban streets sparkle with for sale signs. Families tour houses, hearts full of dreams bigger than their bank accounts. Why rent when you can own? Whispers every billboard, every TV ad, every smiling banker, like a nationwide hypnosis session. It feels like freedom. A key in your hand, a home to call your own. The smell of fresh paint and bad financial decisions. But sometimes, the prettiest promises hide the sharpest traps. Across town, mortgage brokers were high-fiving. They weren't just approving loans, they were printing them. And they had a name for their favorite product. The Ninja Loan. No income, no job, no assets, no problem, because logic had officially left the building. It was lending with amnesia. And these risky deals fed a booming new market. Subprime mortgages, loans handed to people who, under normal rules, would have never qualified. Every signature, every handshake stacked another block in a tower everyone swore was solid. But if you listened closely, you could already hear it creaking. The spark. The Federal Reserve made money free. Interest rates? Nearly zero. And America went on a shopping spree for houses. Because who needs savings when debt is basically on clearance? Prices didn't just climb, they went vertical. It wasn't just a market anymore, it was mania. A collective delusion where everyone from barista to banker felt like a financial genius. The rules? Shredded. Adjustable rates that would explode in 2 years. Zero down payments. It wasn't lending, it was financial Russian roulette, and the loaded guns were handed out with a smile. The borrowers trusted the system. They signed on the dotted line, dreaming of stability, of a backyard for their kids, unaware they were building that dream on quicksand. The financial magic trick. Banks loved profit but weren't stupid. They didn't want to be left holding the bag if things went south. So they performed the ultimate financial illusion. Thousands of shaky loans, this dynamite of debt, were bundled into a single box called a mortgage-backed security. It was like taking 1,000 spoiled apples, blending them into a pie, and calling it gourmet. To perfect the illusion, they needed a stamp of approval. Rating agencies, the referees of finance, were paid to label this toxic bundle AAA, the same as the safest government bonds. It was like hiring the arsonist to write the fire report. Corruption disguised as credibility. A lie wrapped in spreadsheets, tied with a bow of false confidence. Betting on the collapse. A handful of outsiders, skeptics who actually read the fine print, saw the rot. They asked a dangerous question. This is a house of cards. What if we bet against it? Wall Street smirked. You want to bet against the American homeowner? Sure. They built the ultimate weapon, the credit default swap. Buying insurance on someone else's house, hoping it burns down. It was capitalism's version of cheering for a car crash. No ownership required. No acquaintance needed. Just pure speculation on disaster. The global economy became a massive, interconnected casino. Except in this casino, the house didn't always win. Sometimes it exploded. And in the back room, the smart money quietly bet the floor would collapse. The implosion. Then the clock ran out. 2006, 2007. Teaser rates expired. Monthly payments doubled, then tripled. Defaults started as a trickle, then became a flood. Those AAA investments weren't safe. They were financial poison, now pumping through every major bank. The tower of Jenga blocks swayed violently. Pull one out, and dozens tumbled with it. And then, boom. September 2008. Lehman Brothers, a 158-year-old pillar of Wall Street, collapsed. Overnight. Gone. The government had let it fail, thinking it was contained. They were wrong. It was a detonation. Trust froze. Banks stopped lending. The system seized. It was like watching the heart of global finance flatline in real time. The aftermath. The U.S. government launched a $700 billion bailout. Triage on a galactic scale. The people who lit the fire were handed fire hoses of public money. The system survived. The architects? golden parachutes, lavish bonuses, no handcuffs, no justice, because apparently too big to fail also means too rich to jail. Meanwhile, Main Street burned. Millions lost jobs, homes, life savings. They followed the rules, watched the rule makers walk away. The 2008 crisis wasn't just financial, it was a collapse of faith. A system rigged, so gains were privatized, losses socialized. Heads they win, tails we pay. The lie was exposed, but the world learned a dangerous lesson. If you're big enough to fail, you're big enough to get away with it. And the next pretty lie is already being written, waiting for us to believe it. We unravel stories like this so history doesn't gaslight us again. If you want to join us, like and subscribe. And tell us in the comments, which economic disaster or financial mystery should we dissect next?